the month of July, we definitely see this strong China equity market rally are more contributed, in our view, liquidity driven. So we definitely wanted investors to put a level of caution. And what our advice is really look at some of the key liquidity factors in terms of the overall A-share daily turnovers, the margin financing balances, and obviously some of the other indicators like the newly opened trading accounts and some of the liquidity measures to really assess the demand and supply for the equity market.
And what do you think lies ahead with further liquidity measures? I mean, today, as we said, in line with expectations, the LPR held steady. What do you think the PBOC has up its sleeve going forward?
Well, I think PBOC, if we look at the overall data, the total social financing was recorded at roughly about 20 trillion for the first half. So that's up double-digit year-on-year. So they're not that far in terms of their overall target of 30 trillion. So we definitely think on the monetary front, there will be some more marginal tightening, if you will, bias for PBOC in the second half. But the other liquidity measure we are looking at is obviously there is quite a lot of supplies, either from the IPO market from Starboard, Namboard, and also quite a few of those private placement coming to the market. But on the supply side, we definitely see record fundraising on the onshore mutual fund side, and some of the wealth management products are also moving towards equity investment with the low yielding environment in China.
Thomas, what's happening in the IPO market, in the stock market in Greater China, would you qualify that as a bubble? Or many analysts are saying this is an early stage of a bubble, but if you look at valuations and the kind of participation that we are seeing, that in many ways reminds you of what a typical bubble looks like.
Well, on July the 10th, we did raise our EPS estimates on the back of stronger than expected Q2 GDP growth. But having said that, as I mentioned, there are quite a bit of a liquidity-driven rally, and a lot of companies taking the opportunity to tap into the capital markets. So we definitely need to put a level of caution on the potential valuation as well. But overall, if you look at it, even with our renewed target of say CSI 349, so that implies roughly 14 times of PE, which is around the historical average. So the valuation is not that stretched.